Welcome to Activity Ratios. What is an activity ratio? It measures the efficiency of the company in converting its resources into sales or cash or in operations. I want to emphasize na pag activity ratio, the formulas will always have a relationship between income statement and balance sheet accounts. Why? Because ang gusto natin malaman, how efficient are we in utilizing our resources? So that's why, kung mapapansin nyo sa lahat ng formulas natin mamaya, there will always be that relationship between income statement and balance sheet accounts. So let's start. Accounts receivable turnover ratio. This tests the company's speed and efficiency in collection of accounts. So, kung napapansin nyo, ang formula natin is net credit sales divided by average accounts receivable. Yung credit sales, yun yung nasa income statement. Yung accounts receivable naman, yun yung nasa balance sheet. But I want to emphasize the word average. Ano bang ibig sabihin ng average? Dapat merong beginning and ending divided by 2. So, nakikita nyo sa baba, accounts receivable beginning plus accounts receivable ending divided by 2. But the question, sir, what if hindi given ang beginning balance? Okay, so kung sa problem, hindi given ang beginning balance, ending balance lang, ending balance na yung gagamitin natin. Okay? So, okay ha? As possible, we wanted the average. Pero kung hindi given yung beginning, we assume na yung ending. Okay? So kung walang beginning, ang gagamitin natin, ending balance. Okay. Accounts receivable turnover is directly related with days sales outstanding. Ito naman, it measures the average number of days to collect a receivable. So the formula, so dito, kung napapansin nyo, gagamitin natin ang accounts receivable turnover. The formula will be number of days in a year divided by accounts receivable turnover. Okay, ano ba yung interpretation natin of the day sales outstanding? So we assume na ito yung days from the date of credit sale to the date of collection. So in average, how many days does it need or how many days will the company do credit sale to collection? So ilang days from credit sale to collection in average? Okay, the question will be this. Ano ba yung ibig sabihin ng number of days in a year? Ano bang gagamitin natin? Do we use 360 days or 365 days? Okay. Number one, we assume na given yan sa problem. So kung merong given, yun yung gagamitin natin. But what if silent? If none, we assume 365 days. Pero there are certain instances, let's say multiple choice questions. Pag walang lumalabas sa choices, under the 365 days assumption, try 360 days. Okay? So again, as possible, given siya, pero kung hindi siya given, 365 days. Pero kung multiple choice to, at hindi lumalabas yung 365 days, try 360 days. Okay. Ito naman, inventory turnover ratio. It measures the firm's efficiency in managing and selling its inventories. Again, merong pattern na yung numerator, yun yung income statement account. Yung nasa denominator naman, yun yung balance sheet account. So for inventory turnover, what we do is cost of sales or cost of goods sold divided by average inventory. So again, since it is an average inventory, inventory beginning plus inventory ending divided by 2. Days supply in inventory. So in the same way as accounts receivable turnover, meron din siyang relationship sa days. Okay, so ito naman, it measures the average number of days to sell or consume the average inventory. So in short, ilang days ba from the date of purchase to the date of sale, or from the date of production to the date of sale? So the formula is number of days in a year divided by inventory turnover. So yung number of days in a year na assumption natin sa AR, the same. Okay? So yun yung ginagamit nating assumption. Yung sinabi ko kanina. Accounts payable turnover ratio. It measures the firm's efficiency in meeting its accounts payable. Ito naman, napapansin nyo, the same. Merong income statement account at balance sheet account. So kung nakikita nyo, net credit purchases. So, di ba, ito yung nasa income statement. Di ba, pag nako-compute tayo ng COGS, dapat kasama yung purchases ng company. Divided by average accounts payable. So, since it is average, accounts payable beginning plus accounts payable ending divided by 2. And merong average payment period. So it measures the average number of days to sell or consume the average inventory. So ito naman, ilang araw ba or how many days does it take from the date of credit purchase to the date of collection? So number of days in a year divided by accounts payable turnover. Ito, plant or fixed asset turnover ratio. It measures the level of use of property, plant, and equipment used in operations. So the formula will be net sales divided by average fixed assets. Investment or asset turnover ratio, it measures the firm's efficiency in using its available resources or assets to generate sales. So ito, we're talking about total assets. So mapa-current or mapa-non-current, kasama siya sa investment or asset turnover ratio. So net sales divided by average total assets. Capital intensity ratio. Okay, kung napapansin nyo, yung capital intensity ratio, ito yung kabaliktaran ng asset turnover ratio. So ito, yung asset turnover, net assets divided by average total assets. Ito naman, baliktad. Capital intensity ratio. So kung napapansin nyo, yung formula natin for capital intensity ratio, baliktad siya sa investment or asset turnover ratio. Kasi yung formula for asset turnover ratio is net sales divided by average total assets. Ang capital intensity ratio naman baliktad. Average total assets divided by net sales. So let's now go to the problem. Illustration. XYZ company gave the following data. So kung nakikita nyo, beginning, ending. So kung may beginning and may ending, ibig sabihin, kailangan natin i-compute yung average. So yun, accounts receivable, inventory, and accounts payable. So given yung beginning and ending balances. And then we also have credit sales, 900,000 pesos. Okay, the question, maganda sa problem na to kasi kasi given ang credit sales. But what if hindi given yung credit sales? What if sales lang ang nakalagay? Okay, pag sales lang ang nakalagay, there are instances that we can assume na yung sales na yun, credit sales yun. Okay, so kung hindi given yung credit sales, pag sales lang ang binigay, you can assume na yung sales na yun, credit sales lahat. In the same way as credit purchases. Kasi di ba nakalagay credit. Pero what if sa ibang problems, hindi nakalagay yung word na credit. So again, you can assume na yung purchases na yun, credit purchases yun. Okay? So it's good na straightforward yung problem natin. Given lahat. So credit sales, cost of goods sold, and credit purchases. And ito, may binigay pa na assumption. Assume that there are 360 days in a year. Okay? So ano yung hinihingi from us? Or ano yung hinihingi? So, ano ba yung pwede mo ma-solve kung meron kang ganitong given information? Isn't it, you can compute for accounts receivable turnover, inventory turnover, and accounts payable turnover. Not only that, you can also solve for day sales outstanding, day supply in inventory, and average payment period. So, di ba? Oh, eto. So, yung pinapakompute sa atin, yun na yung tatlo. So, let's start with accounts receivable turnover. Okay. Kung nakikita nyo, ang first na ginawa natin for accounts receivable turnover ratio is to find the average accounts receivable. Kasi may beginning at may ending. 100,000 plus 200,000 divided by 2. So our average accounts receivable will be 150,000 pesos. And because we already found the average accounts receivable, we can solve for accounts receivable turnover. Net credit sales divided by average accounts receivable. So 900,000, kasi ito yung credit sales, divided by 150,000. So the answer here is 6. Our accounts receivable turnover is 6. Ano yung interpretation nito? We will further find out if we go to the second formula. Day sales outstanding. Number of days in a year divided by accounts receivable turnover. So ang ginawa natin, 360 days divided by 6 equals 60 days. Okay. For days sales outstanding, what is preferable? Okay? Ano yung mas preferable? Di ba mas preferable na mas madali for us to collect the accounts receivable? Kasi remember, yung 60 days na to, ito yung day from the credit sale hanggang sa collection. So yung collection, ibig sabihin, the time na na-receive na natin yung cash. So the point here is, mas gusto natin, the shorter, the better. Kasi kung, let's say, 10 days lang to, so it means na from credit sale to collection, it will only take you 10 days. Okay. So ano ba ang conclusion? The higher the AR turnover, the better. At ano yung effect kung mas malaki ang accounts receivable turnover natin? Kung mas malaki ang AR turnover natin, mas mababa ang day sales outstanding natin. So, okay? So, yun yung relationship ng accounts receivable turnover and day sales outstanding. So, mas gusto natin, mas malaki yung AR turnover para mas fewer or mas konti na lang yung day sales outstanding. Ito, inventory turnover ratio. So, the first step is to find the average inventory. So, beginning plus ending, so 120,000 plus 240,000 divided by 2 is 180,000 pesos. Okay. Inventory turnover, so cost of sales divided by average inventory. So 720,000 divided by 180,000. So our inventory turnover ratio is 4. Days supply in inventory. Number of days in a year divided by inventory turnover. So, kung nakikita nyo, meron ding relationship ang inventory turnover sa days supply in inventory. 360 days divided by inventory turnover of 4. So, the answer here is 90 days. Ano yung interpretation? From the day na binili mo ang inventory hanggang sa sale or hanggang sa time na nabenta mo siya, it take you 90 days. Okay. Ano yung mas maganda? 'Di ba? Kung ikaw yung negosyante, mas gusto mo mabenta agad ang inventory. Why? Kasi kung hindi mo siya mabebenta agad, there is a possibility na maging obsolete na yung inventory mo. So mas maganda na mabenta mo na siya agad-agad. Ano yung mga examples nito? What if nagbebenta ka ng gulay? So, can you imagine na from the time na hinarvest mo yung gulay hanggang sa nabenta mo siya, 6 months? Eh di ba, bulok na yung gulay. Or ano na siya, spoiled na yung gulay. So, ang goal natin is mas mataas yung inventory turnover. So, we want our inventory turnover to be higher so that the days supply in inventory will be lower. Okay? So, mas gusto natin na the lesser the days from purchase to sale, the better. Ito, accounts payable turnover ratio. So, again, average, 60,000 plus 100,000. So, ito yung accounts payable beginning and ending divided by 2. So, our average accounts payable is 80,000 pesos. So, our accounts payable turnover is net credit purchases divided by average accounts payable. So, 400,000, kasi ito yung credit purchases, divided by 80,000. So, the answer, our accounts payable turnover ratio is 5. Average payment period. So, again, kung nakikita nyo, may relationship na naman siya. So, number of days in a year divided by accounts payable turnover. 360 days divided by 5, so 72 days. Ano yung interpretation ng 72 days? It takes you 72 days from the time of purchase until the day of payment. Okay, so from purchase to payment, it takes you 72 days. Okay, ano yung mas gusto natin? The question, to be honest, is it depends. Pag average payment period. Bakit it depends? Kasi ganito. Mas gusto natin, mas mahaba to. Okay? mas mahaba sana ang average payment period. Why? Because ayaw natin magbayad agad. Kasi may opportunity cost. So ayaw natin magbayad agad kasi hindi natin ma-let go yung pera. But the warning or the caution is, syempre, hindi siya dapat maging super long to the extent na wala nang trust sa atin yung mga creditors and suppliers. Okay? So ano yung conclusion ko? Mas maganda sana na mas matagal ang average payment period. But we need to also consider our creditors and suppliers. Kasi what if sa sobrang tagal natin magbayad, hindi na sila magpapautang? Okay? So kaya kailangan natin i-balance. So yun. So kung nakikita nyo, ang effect, so may effect na naman yung accounts payable turnover. So kung mas mataas ang accounts payable turnover, it means that the average payment period will be lower. Okay? So I hope that you are listening or you're taking into consideration the relationships. Kasi important yung relationships ng accounts payable turnover and average payment period in the same way as the other ratios. Okay? Pero eto na lang, before we end. Sir, bakit ba yung period, bakit lang siya nag-a-apply pag accounts receivable turnover, inventory turnover, and accounts payable turnover lang? Bakit yung mga iba, wala tayong paganito? The reason is because, di ba, generally speaking, inventory, accounts receivable, and accounts payable are either current assets or current liabilities. So ang point nito or ang importance ng mga ratios na to, important ratios to for our day-to-day operations. Okay? Malaki yung relationship ng mga ratios na to sa day-to-day operations natin. The fact that we're talking about current assets and current liabilities. Okay? So yun yung discussion natin for activity ratios. And I hope that you understood the video. So thank you.